IndusInd Bank at one point was up 5%. Now the weakness of the market has come down, but still among the top Nifty gainers, up around 2% as the RBI has approved the appointment of Rajiv Anand as the MD and CEO for the company. Brokerages remain mixed. The stock off its morning highs, but still up 2%.
Tobacco products maker Godfrey Phillips delivers a smoking hot revenue growth of 35% and profit growth of 25% in the first quarter. The stock is up 9.5%.
Triveni Turbine slips on a disappointing first quarter performance. Revenue and EBITDA fall over 20% as geopolitical tensions hurt the business. Stock down 7%.
Angel One's client acquisition remains strong and market share rises in July. The stock, however, sees a sharp fall from the highs this morning.
Butterfly Gandhimathi reports strong margin expansion, revenue growth despite a challenging environment in the first quarter. The stock up nearly 9%.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal studio. I'm Nigel, with me is Mangalam. We're still celebrating yesterday India's win against England, though the markets, well, we've given back most of what we put on in yesterday's trading session. Hey, Mangalam.
Hi, Nigel. You know, yesterday's game puts a spring in everyone's step. Yeah. Let's see what happens from here on. But just like, Test cricket, life is not any different. It gives you a lot of opportunities. Stick the ground and stick around. And obviously, even if it's a well-fought series, 2-2 is as good as a win.
Well, that's right. And we were in minority, right, if we thought that we're going to end the series 2-2. So it was good to see that the fight back. And particularly in this game, the way the English batsmen came out batting, best ball, it didn't really play out for them because they were playing a T20 at the start of it. They put us on the back foot, but our boys stood up and they got counted.
Baseball, unfortunately, has never worked against India in the last few years, ever since, the baseball came by.
Yeah.
India is the only team where they haven't defeated. But what we'll do is we'll talk about all of this off the air. Right now, we do have a bunch of earnings to contend with. AkzoNobel reported a weak June quarter. That's exactly what all the paint companies did as well. Both revenue and profit facing pressure along with margin contraction. But more lies ahead for the company as the big deal that we were talking about has happened. The CMD Rajiv Rajgopal joins in. The stock down about 3.5% on the back of the first quarter performance, but important to track what lies ahead. Rajiv, always a pleasure speaking with you. And instead of now asking you, what's happening, who's buying the company, now that we know all of that, the question is how far along the integration process is right now. I mean, by when is this entire deal likely to complete? And what have been the levers that have been put in place so far, ever since the announcement that has been made?
Good morning, Mangalam. Good to see you and Nigel, and good morning to all the viewers. So first and foremost, as far as the entire process is commenced, as you know, you were there when the announcement got made. The CCI application had got filed around the 17th of July. It takes, I understand, about 3 to 4 months, and then it will be followed by the open offer. At this point of time, I think that we are constrained to what we can discuss, and it's largely around the organization, etc., that the discussions started. Obviously, some of that will pick momentum because we've been also busy, given that fact that we had our board meeting and AGM, etc. So it will start picking up, and obviously factory visits, etc., will commence. But suffice to say, I think delighted to be part of a conglomerate, which is one of the most dynamic groups in the country. And hopefully, me and my entire team will sort of move lock, stock and barrel towards the end of the year. I expect the deal to conclude by the end of Q4 or early January, but that's the timeline we currently have, Mangalam.
But a lot of the work will be done before that as well, right? You want to hit the ground running. So while... Yes. My question was, while process takes its course and the integration formally happens by the fourth quarter, I'm sure you guys are now looking at where and what, all of that before you all actually formally integrate. So
there are a bit of constraints because of the CCI process. There are do's and don'ts of what we can and what we cannot discuss, and we are complying to each and every part between both the organizations. It's important from our perspective, from a governance point of view. So hence, I think that entire, discussion would really start a couple of months or closer to when the CCI approval is in place. That's when really the momentum will pick up. But yes, I think at a very high level, we are understanding in our way, what we could do. I think the larger part is in terms of what the company name would be, etc. And I think it's more for Mr. Par Jindal to enumerate that. I think it's not fair on my part to really talk about it. So I leave it for him to sort of give you an update of what's happening.
You know, Rajiv, it's always good speaking to you. Me and Mangalam, we should think about how we're going to go about bowling this over. 6 balls, and then we had to bowl in the googly with regard to who's going to take over. Now, at least that query is out of the way. So let's focus on business. What's the split between retail and B2B segment? And in the first quarter, how did both these two segments perform?
So actually, this is one quarter, Nigel, where in the month of June, we actually had a very difficult month. Actually, April and May we were doing well, but I think because of the uncertainty exactly in terms of what's going to happen on the warranties that are given on the products, retailers in terms of what's going to happen to the stock lying with us. While we did anticipate some of it, and we did talk to about 700 dealers when we had a meeting with them in Kolkata around the mid of June, obviously it wasn't enough because, it was coming across. So this was across both, I would say, on the decorative side, both on retail and projects, we had a tepid month. But you know what? The good news is July has bounced back. So pretty much if I now look at July, and July ended up with a growth, which may be a little contrary to the way the industry would have seen it. So if I take an average of July and June, I think we would have been there. I think now the trade, our customers and consumers have got a little more certainty of what's going to happen. And they know that the gear is going to change and we are going to get far more aggressive. So I think that's good. I think that's the good part. On our B2B business, on our coatings business, again, we had similar challenges, actually. And we also had end of order because marine and protective, for example, there's a clear order book for 6 months. We had a massive sort of an uptick last year in the same period where some of the naval ships were getting sort of quoted. Obviously, that came to an end. But again, if I look at the order book for the next 3 to 6 months, I'm not worried. I think this was a blip, and that blip will be taken care of. I think our journey, our quest of continuing to gain market share, giving both customers and consumers confidence in the fact that we are very much there. We continue to stand for best-in-class quality. And with the dynamic and the speed and aggression that JSW integration will bring in, I think we're really poised to really, partake in the larger market.
Possible for you to quantify the impact around the channels on account of the takeover announcement? You said that June was difficult for you. I mean, I suppose part of that could also be on account of unseasonal rains, but a large part was because of this uncertainty. Could you give us a sense how much of that was lost and now how much of that has come back? What is it that you had to say to them?
So Mangalam, typically, see, look, I didn't talk about unseasonal rains or the early rains because that's got covered by many of my peers who already come on your channel. But really, I think we typically dealers in our case stocks approximately between 3 weeks to 4 weeks of stock. There was an impact of about a week because people started down stocking a bit, not sure in terms of what's going to happen next. We've had to send out letters to our customers and to our B2B customers, giving them an assurance that all the warranties and everything will stand good. AkzoNobel will stand guaranteed till the time AkzoNobel is there. And fortunately, JSW has also agreed, and obviously we want a seamless integration happening between the two business. Once that got done and people got the confidence, by the end of first week of July, things have started pulling back. So it's just a matter of time now that we believe that we will start sort of getting back.
What about the growth outlook for the year?
So,
if you could tell us what kind of ambitions would you have? Obviously, Parth will get involved at some point of time. I had a chat with him yesterday. He's sounding very optimistic about cement. So I'm sure he'll be quite optimistic on, paints as well. But what growth aspirations do you have? And Rajiv, do you have, is there going to be any price increases or do you think that's already in?
So Nigel, to answer that part, look, I don't think any price increases are going to happen at this point of time, because look, the market is discounting at a much higher level, and which is baked in. And fortunately, we've been able to, from a decorative side, at least keep our margins relatively intact. Our margin dilution happened in the coatings because of the mix. We sold more of the low margin business in the last quarter than the high margin, which is our vehicle refinish business, which will come back. To answer your question in terms of outlook, I believe that, look, we would end up with now a high single digit, not a double digit growth on volume, and value will slightly, maybe about 1 or 2 points lower than volume because of the fact that the growth is largely coming in the economy, waterproof, mass, those segments and construction chemicals. We are yet to launch our construction chemicals portfolio. We've just started testing it with a few projects, decorative B2B customers. And as we get confidence and as the stability, etc., is checked for, we'll then start bringing it into the B2C market. So we are fairly confident. I think we've got an aggressive plan. We will also come with a new campaign closer to Diwali. And with that, I'm fairly confident that we will start getting back. Again, my first ambition is to get back to being the top two in terms of growth, something that we lost last quarter after being there for almost 12 quarters. And then obviously then start really gearing back for high single digit and then double digit growth. That's the progression.
So this year high single digit and thereafter double digit.
Yes, absolutely. We stand committed. Yeah, you're right. I think Parth has had a conversation with us in terms of his ambition and outlook. It is very aggressive and I'm looking forward to it.
All right, we take that point. Rajiv, thank you so much for that. What proportion of those conversations were around margins, or was it largely top line itself?
Both. I think, look, from our perspective, obviously it was largely top line, but there would be a margin conversation because erosion of margins is not really something that we would like to. It's about saying how we can reinvest in our business.
Right. Take that point entirely. Thank you so much, Rajiv, for joining in. Look forward to having this conversation with you closer to you getting the CCI approval and thereafter the strategies that you would be making as well. That's AkzoNobel, stock lower on the back of a weak first performance, but the company is guiding for better times ahead. With that, we'll take a short break. On the other side, we have the management of Aditya Infotech, CP+, which listed on the NSE with gains of over 50%. The IPO, remember, subscribed over 100 times.
Welcome back. You're tuned in to Chartbusters. So let's get our next management on the show. We have security and surveillance products maker Aditya Infotech, which has made a strong debut on the street, listing with gains of over 50% to its issue price. To discuss the prospects of business going ahead, we're now joined by the Managing Director, Aditya Khemka, and Anup Nair, the President of Strategy and Business at the company. Hi, gentlemen. Good morning. Thanks a lot for joining in. Congratulations to all of you all. It's a big day for you, for your team, your families as well. So wishing you all the best. But, the very fact that the stock has opened up higher, the street will want to know some kind of guidance from you all. So give us a few details. What kind of utilization levels are you functioning at currently? I believe your market share is ballpark 20%. Where do you see that number headed? And if that's the case, what kind of growth are you looking at? Do fill us in with this.
Yeah, so thank you for having us, and I think we are highly grateful for the response we've got from the market on the listing. It's something we've been dreaming and cherishing for years. Thank you so much. Aditya Infotech and CP Plus is one of the leading CCTV and surveillance company in India. We've been literally playing the role like an evangelist of this industry for last over 2 decades now. And we have, the largest dealer distribution network across 550 towns. The manufacturing is 3rd largest in the world in Kadapa, Andhra Pradesh. This is like the largest plant outside of China for CCTV and surveillance products manufacturing. And a lot of backward integration to take the company to Atmanirbharta, as the Prime Minister says, to become Atmanirbhar. We are working towards that direction. And, being the only brand, the only Indian brand at that space we are in right now, and the only brand known at the customer level with our, tagline, Upar Wala Sab Dekh Raha Hai, which really helped us resonate well with this technology and giving a name to this category. I think we are at a sweet spot and a perfect position to deliver value to our shareholders moving forward.
What are the numbers though? Let's get to some numbers. Utilization levels and
in terms of market share. So the market share for the company is at about 25% plus, and the market share that you were mentioning is for the own brand CP Plus. So that was at about 20% plus, and the current utilization levels is at about 75%.
All right. One of the questions that the street has is that a large part of your inputs are imported from China. Is there a country risk there? And what are you doing to integrate yourself fully from India? And even the products that you make from India, what are your imports for the components out there?
Yeah, so I think, Government of India has also come out with this new certification called STQC, which has several clauses regarding cyber security and trusted supply chain. So the company has, over the last several quarters, diversified the whole supply chain for all the critical components outside of China. So our dependence on the critical components or the semiconductors is no longer on China. So it's largely on American companies, Taiwan companies, and using Taiwan fabs. Once the fabs in India come up, which we are hoping, we could also localize the semicon, which is the major chunk of the BOM component. And apart from that, a lot of localization has already happened in things which we can do in India, be it all kinds of power electronics or cable connectors, housings, and stuff like that. All that is already done in India, and a lot more is in the process. And as we see the electronic component manufacturing scheme showing some colors in the coming future, the passive electronics can also be localized. So I think it's a journey. We started as an import model, moving into manufacturing, into R&D, and now into localization. And also, we are working with companies like L&T Semiconductor to design IP camera chips from India. So the SoC design work is also going on. So a lot of work like that is happening. Even we just started lens manufacturing in our plant. I think one of the only companies to try that out. And those are things we are already initiating.
All right. 2,200 crores was the revenue in FY23. That moved to 2,800 crore and thereafter 3,100 crore in the last financial year. What is the potential growth rate that we should be looking at for the revenue for your company? What pace is the industry growing at?
Yeah, so the industry over the, let's say, last 5 years in India has been growing around 17%. And we have been trying to beat the industry growth over the last 5 years also. And we've been fairly successful. We hope to continue the same growth in the future, beating the industry and expand our market share. And hopefully with the new changes in the dynamics of this industry, with the STQC certification and the pushback to the neighboring country brands, which the government of India has already regulated, I feel Indian brands like ours tend to hopefully gain better market share, and we will strive for that.
And what about margins? Will hold around 8%?
So margins are around 8.5% EBITDA, and like Anup mentioned, 20% is of our own brand, and the balance is we continue to distribute another brand from China. But with this new regulation and tailwinds, a large chunk of our business will move to our own brands where we have a better margin. So we hope to increase that. And now even the manufacturing is 100% subsidiary. So earlier we used to consolidate half of the margin. We will have full margins, consolidation. So overall, we hope the EBITDA level should be.
So 20% from your own brand goes to what number?
No, so I'll take that. So what he meant is that the own brand share within the revenues is at about 75%, and the 25% is a distributed brand. So the blended margin is what you're seeing at 8.5%. Right. And the own brand margins would be almost 3x the distributed margins. And with the tailwinds, it's the own brand that will grow aggressively. And so
from 75-25, what will the ratio look like?
So I think we believe it might go to a 90-10 because the neighboring country brands cannot qualify for selling IP cameras any further with the new regulation. So their play will only remain in the analog camera technology, which is more like a flat market.
So say 3 years from now, possible for you to get to almost 6,000 crores of revenue along with double-digit margins, given your past run rate and the triggers ahead?
So I don't know if I can comment on that with the futuristic numbers, but we would love to be there.
All right, take that point. Thank you so much, Aditya and Anup, for joining in. The street has placed a big responsibility on you all. The stock is up 60%. The issue was subscribed 100 times. So obviously, it's on you to go ahead and, repose return the sort of faith that everyone has shown on your business. With that, we'll take a short break, come back on the other side. We're getting more of the markets and stock-specific action. It's a 100-point downtick on the Nifty, which continues closer to 24,600. Let's see whether 24,550 to 24,600, the range that has been the support for the market, continues in today's trading session so far or not itself. And we've suddenly seen a switch between the number of stocks which are advancing versus the number of stocks which are declining. 1,600 in the red for about 1,000 in the green. We'll leave it to the team of Trading Hour and the others that follow to take you through all the rest of the trading. With that, we wrap up on this edition of Chartbusters.